Welcome back to Everything ETFs episode 2. We want to first off thank everyone for watching, commenting, subscribing from episode 1. The feedback was absolutely amazing, and we're really excited to get into it. As always, I'm Spencer Invests, and I want to have Brad introduce himself.
So my name is Brad, and I run the Income Architect YouTube channel. You can find me on X at Architect Income. Somebody already had the name.
I can't stand it when that happens. Well, we have a lot to cover in this episode. It seems like even though we filmed a week ago, so much has happened since then, starting with what I think could be one of the biggest launches of 2026 in the income space, these leveraged ETFs by TappAlpha. So we have two. We have TDAX and TSYX, which are just leveraged versions of TDAC and TSPY. And I want your just opinions overall on these, Brad.
So I was skeptical first. They're using swaps, and inside the swaps, he's holding the actual T-SPY or TDAC at 1.3% leverage.
Mm-hmm.
I was a little, again, skeptical about that. I mean, why not? It's a new fund. Better mind your business. We've seen other leveraged funds that didn't operate correctly. Not going to name names, but
Yeah.
you see 1.2 leverage, and there really doesn't appear to be giving you 1.2 leverage.
Mm-hmm.
But I looked at Friday's results of TDAX, TDAX, and it was almost up exactly it was up 1.23 over top of the Qs.
Really?
So the leverage did show up on Friday. So I'm pleasantly happy that that's how it did, and it definitely did a whole lot better than TDAX.
Mm-hmm.
Or yeah, you know the difference. So
Yeah.
it did better than the other fund, because I compared them and said, okay, is it really give? And that's the scare. The other scares, what is the swap drag or the leverage drag? Because we can go look at other funds and say, hey, these 2x funds on MSTR have not done very well.
Mm-hmm.
Long term. Even if you buy the inverse, they haven't done very well over the long term.
Yeah.
So you can look at that, but at the same time, you can look at TQQQ, which is 3x leverage on the Qs, and go, that has done fairly well being 3x leveraged, and reset daily just to make sure we understand what they're doing there.
Yeah. It's so interesting, this addition to so many different leveraged funds, because I was not sure what TappAlpha was going to do. We've had Cy on our channels. He's a phenomenal guy, super intelligent, and really a really good communicator, for his position. He's very upfront with a lot of things. And when I first spoke to him, I was like, why not go weekly with your original funds? And I think it's so interesting what they ended up deciding to do, because he said, no, I want to keep these as is. And I don't blame him for that. The performance was amazing. I kind of thought he would do the same kind of thing with just in a weekly format, but no, he upped it a little bit. He added a little bit of leverage. Now, I like to use leverage. I hold a lot of the round hill 1.2Xs. I hold direct shares that employ half leverage and half covered call on them. And I think it's a really cool idea, but he's also targeting a bit more of a high risk audience. And I don't think 1.2 and 1.3 would be really high risk. It's just, riskier than already outright holding them. But these are also on some pretty popular indexes. So it's not like a single stock, although I do hold some of the riskier single stock ones as well. But it's really interesting that we're seeing leverage employed. And I'm curious where TappAlpha is going to go from here, because I would like more funds. I would like an a Russell fund, IWM. Like, I think they could add, to the list that they already have, without even having to create new funds under, different categories. But I'm curious what you think the reaction will be from the market. And our audiences are, I don't know if I wouldn't say they're a bit different. We're all pretty much heavily income focused with what we talk about here on YouTube and whatnot. What do you think your audience is going to do? Are they going to react because in my opinion, I think my audience is going to be more excited about these than they will just the normal because they have a little bit more risk and a little bit of that leverage employed. So, what are you thinking?
So because of my audience is a little bit older, we're a little more skeptical.
Hmm.
And what I told them, I actually did a video on this, probably the same day that you did a video on it, is I'm more of a wait and see to make sure that these things actually operate the way that they should operate. You
Definitely.
know, I want to see that, hey, it does get that 1.3. And
Hmm.
when I talk to Cy on Wednesday, I'll let you know what he says. So Cy will be on my channel on Wednesday.
I've got him on Thursday.
Nice.
Yeah, he's doing his round.
I better get my video edited faster than you can edit yours.
Yeah, you have that. I don't know how long it'll take me. I'll post mine after yours either way because I think I've already got stuff backed up for next week. But it is funny. It's funny how YouTube's a big deal with a lot of these funds now. But I do appreciate Cy coming on to explain these things because he is really good at just discussing them. And I'm not paid by Cy by any means. I think he's
That's
just a
right.
really nice guy. But
Yeah,
what do you think? Yeah, go ahead.
Si's a great guy. He needs to articulate how they're going to be doing the swaps, what the leverage drag is, what he foresees. He does. You never know, but
Yeah,
you know, ideally, if the market goes flat, and that's where it comes into. If the market goes flat, then these leverage funds will underperform the non-leverage funds. In an up market, they're going to outperform. So you get into that you underperform in a flat market, but you're selling options. Well, that's because of the drag of the leverage.
yeah. That's a really important factor too, and we need to collaborate. Let me know what you're going to ask him, and I'll ask him different questions because I'm probably going to hone in more on the weekly side, the utilization of leverage, and why Tap Alpha is going that direction. More so, broader scheme of things, and then future funds and what they're planning on, and things of that sort. So we'll hopefully mix it up so I'm not repeating everything from your video, but I'm
Yeah, it'd be all
curious.
right.
Yeah, well, I think it'll be fun. I like that he comes on our channel. That's really cool. But I'm curious too, Brad, with your take on these boosted NEOS ETFs. And I will be honest, I have not been looking into them whatsoever. I've been too swamped with work and whatnot behind the scenes. So if you could give a little bit of a rundown on these, do we have a lot of info about how they're going to operate? Are they going to utilize leverage?
So tomorrow's video from Brad is Troy's on the channel from NEOS.
Love it.
I I can tell you that the way that they're going to do is still under SEC review, so nothing is finalized.
Hmm.
They're targeting as soon as it gets out of SEC review that they'll immediately go live within days.
Hmm.
But the way that they're targeting is okay. Take your SPY eye. They're going to take a synthetic on 50% of the notional value of the stocks. And then they're going to write the same type of percentage on those additional 150% leverage. So right now, I think they're written on like 65% of the notional value.
Hmm.
So they'll write 65%, but instead of 65% on 100, it's 65% of 150.
Okay.
And that's how they're going to get the additional revenue to pay out. Now, I personally, on the boosted funds, and this is that Maverick and Brad, I will probably end up buying the boosted funds. And I did buy a few shares of TDAX from TappAlpha
Hmm.
just to make sure I knew what I was getting myself. But I actually have an author coming onto the channel this week that talks about it's more of a swing trading
Hmm.
and being in leverage funds and getting out of leverage funds. And since most of my holdings are in a Roth or an IRA, I don't have to worry about short-term capital gains or long-term capital gains. So it might be interesting for me to be able to get these little bit of leveraged funds, but actually swing trade them based
Mhm.
on market conditions.
Yes. Yeah, that'll be really interesting. I'm looking forward to you have a lot going on this week. I'm curious. I'm gonna have a lot of content to catch up on for sure. That's awesome.
Yeah, I wouldn't even tell you who's coming on Thursday. I actually this week I have 3 interviews.
It's so much prep work. I love the interviews. They're not my favorite, to be honest. At one point, I swore off interviews. I'm like, I'm not doing them anymore. It's a lot of for viewers. The back and forth is what takes up a lot of time with these interviews. Setting the time, working with these schedules of these very very busy people, right? Super busy, and then getting the questions and everything prepped, trying to make it all set, and editing can take a lot of time depending on the amount of editing that you do, and so on and so forth. But there is a lot more work. But for me, it's just talking with someone for an hour, if I've just met them, can be hard. The introvert in me, it takes a lot to make that work. But just
The
yeah.
following week I have 5 interviews.
Oh, you're a
And
warrior.
I sat there and I went, it I look at all the underlyings of an ETF before I talk to somebody.
Mhm.
I don't wanna seem uneducated about their fund,
Yep.
right?
Yeah.
So I wanna look at their funds, see what they're holding, see what they're doing, understand what it is, derive some, because one of these funds that I have this week, they're doing something that's totally different.
Mm.
It is, it's a not a buffered fund. It is a callable fund. So it's like bonds that they can actually call away on the NASDAQ.
Yes.
So when they have an auto callable bond based on the NASDAQ paying 14%, it's
Mhm.
interesting. And I want to make sure I know somewhat what I'm talking about when I bring the guy on and talk to him.
Oh, 100%. It's tough, yeah, in those if you're not quite sure or if you don't feel like you've had the prep time that you needed. Oh, it ends up being a lot. And jumping back to the NEOS funds, I think I'll probably be buying them as well. Do we know how many there are? Is there all do we know the underlyings as well?
So there's 3 of them with the SEC. It's on SPY,
Mhm.
the Qs, and Bitcoin.
Really? So they opted out of the Russell.
So they opted out of the Russell right now, but
Mhm.
it's those 3 that are still under review, and probably because of crypto that they're taking a little bit longer time
Yeah.
reviewing it. So
Well, what's your take on the Bitcoin fund? Because it's pretty easy to convince me to buy any sort of leveraged Nasdaq or S&P fund, but I'm a little nervous about that Bitcoin fund, especially if we see a pullback. I mean, that would.
that's right, and that's why I think swing trading these might be a little bit better than this long. Well, and it's the case. You're younger and I'm older,
Mhm.
right? So even if you're not going to swing trade these, you have time to recover. You know, me being at my age, I just don't have the time to recover.
Mhm.
So if it goes down, instead of going down 20%, if it's going to go down 30%, I just don't have the time to recover like you do. So
Yeah.
I'm a little more cautious of that. It'll be a smaller percentage of my portfolio. I was thinking allocating 1 or 2% because that will not cause me to have to go get a job. But
Yeah.
if I allocate 1 or 2% to get a little extra boost, call it
Mhm.
call it my alpha side of my portfolio. If I can grab a little more alpha by swing trading, and it's going to be something more like if it's above the 200 day, I own it. And if it's below the 200 day, I don't own it.
Mhm.
All right. And there's certain rules that you can set up and just make sure that you just don't get wiped out.
Definitely. And you touched on a really important point that we haven't talked about yet, which is you're living kind of the dividend dream. You're retired, living off your investments, which is every dividend investor's goal. I'm at a different stage of my investing journey, trying to put in as much money as I can. And I was thinking about it right now. I'm curious the amount of money I'm trying to invest. every month is probably pales in comparison to the amount that you make every month off of your investments, right? Because my portfolio is sitting at about $40,000 total right now when it just comes to the stock market, not including crypto and whatnot. But I am still trying to build a lot. And so when it comes to these leveraged funds, it makes a lot more sense for those who are hoping long term to get a faster return, I guess you'd say, a little bit of a higher risk return with these. But I'm curious too if we look they're so new, right? And I always say new ETFs carry their own risks with them. You don't know the
Yes.
performance. You don't know a lot of the back end stuff that you can tell with a ETF that's been trading for 5 to 10 years. I'm interested to see 3 to 5 years down the line how the leverage component has an impact on TDAX versus TDAC, especially when you consider DRIP, because I do DRIP all of my dividends. So long term, it could be an absolute home run. It could be pretty stale. It could trade sideways, or it could underperform. But I guess only time will tell, and that goes for all of these new boosted funds, the leverage
That's
funds.
right.
We have a lot going on in the market, a shift towards a lot of these leveraged funds, and with that comes its own risk. So I also found out a little bit more about what we talked about in episode 1, which is the SEC halted a bunch of, I don't know if they were technically in the prospectus stage.
Mhm.
They halted a bunch of these funds ranging from 3x leveraged to 5x leveraged, which was the I think the one that kind of set this entire thing in motion. So in your opinion, do you think they're ever going to allow a 5x leveraged fund trading on the market?
I just happened to be at the CBOE when this all came about, and I was having a conversation with Matt Tuttle from Tuttle Capital, which is actually helping run size new funds.
Mhm.
And he's like shaking his head, going, how are they even going to even accomplish 5x
Yeah.
in an ETF wrapper?
Mhm.
Yeah, 5x is not uncommon outside of the wrapper, but
Yeah.
inside the wrapper, how is that going to work? And he was just like, they're just trying to push these things through just in case it's a long government shutdown. But then, you know, and it depends on the people that were trying to file for them too, right? So
Definitely.
I don't think that we'll see more than 3x leverage because you got the Qs, right?
Yeah.
TQQQ, which is, I don't think that you'll see anything greater than that. That's not at least probably on an index or something like that.
Mhm. Very interesting. It's crazy. I can't imagine the type of investor that buys a 5x leveraged fund, to be honest. I mean, talk about
A
like
day
your
trader,
yeah, that's a good
yeah.
point. Day trading probably would be the main component. I mean, maybe Wall Street Bets would get a hold of it and you'd see some crazy Reddit momentum. Um, I wanted to point something out, Brad, and get your opinion on this. I know it's crazy. I'll preface it by saying that. So I have two YouTube channels, one that I do my income side and one that's kind of my growth and my dividend stock, in a mixed bag. So I saw a post on Reddit the other day, and it's like 15 stocks that Reddit thinks is going to perform the best in 2026. I bought them all. Not a lot of money. I put $100 into 11 of them. So it's $1,100 that was in a separate Robinhood portfolio that I've had for a long time that I've never really used. And I'm going to be tracking them. I just want your opinion. How insane is that on a level of 0 to 10? And are you at all interested in the performance of these? Do you think that Reddit stocks and Redditors choosing stocks could outperform the S&P or the NASDAQ in 2026?
I think retail investors are getting smarter and smarter, so that obviously could actually outperform. My comment is would I do it? No. But would it be a starting point for my research? Yes, I think so. I mean, I saw the alpha picks the other day,
Mm-hmm.
and I was like, oh, that's interesting. It confirms what I already own.
Yeah.
So, I looked at that going, that it's interesting how uh, it's more of a confirmation of things, right? Yeah, let's
Mhm.
face it. I don't think I'm betting more on semiconductors this year than I am AI. I'm
Yeah.
I'm I'm thinking infrastructure to build out things other than Meta and Facebook having to buy things. Well, let's go down to the supply chain. Where do they have to buy those to build out what they're building out? And that side of the fence, I think there's going to be. I think we're still in a commodity super cycle, right? I mean,
Yeah.
I don't think what I understood about copper, and there's going to be a new copper fund coming out sooner or later too.
Oh, I'm excited about
Uh,
that.
it's going to be from Curve, and you sit back and go, 10-year forecast on copper, they run out of copper. So the
Really?
question, yes, the question ends up being they're not going to be able to find, mine, and actually extract the copper out of it. One of the largest copper mines is in right there outside of Salt Lake City. You can actually see it as you're flying in. Kennecott Copper. Great YouTube video on the whole entire process that Kennecott Copper does to extract that copper.
Mhm.
But you sit back and go, you're just not going to build a facility like that overnight. That's a
Yeah.
5 to 10 year forecast and planning of building out a big copper mine like that.
Yeah, and permitting and all of that, all the legal things that go into it, yeah.
So I think that's another thing that we should be looking at how does the commodities fit into your portfolio? I mean, gold and silver have been on a run.
They've been crazy, and I was gonna ask you this because I just put a video out on Friday on platinum, and let me show you
Yes.
this. I'm really curious what you think because gold and silver, I just started really getting into it. I'm a novice at best when it comes to understanding this stuff, but I I mean, I just did 20 minutes of research looking into platinum demand and so on and so forth use cases. But I want to showcase this chart in the last year. PLTM is a Granite Shares Platinum ETF. And I like this one because it's the cheapest, has the cheapest expense ratio, and it holds physical platinum.
Yes.
And what's your take on platinum versus gold, silver, copper?
It has its use case. It has its use cases. We're gonna have to
Hmm.
spit that out, right? And and it should be more volatile. And
Yeah.
for me, I know that Curve has filed for a platinum fund, right?
Really?
Yes, I'm waiting for Howard to come out with it. Hopefully, I talked to Howard in 3 to 4 weeks, and I'm wondering
Hmm.
if he's going to launch his new fund when I talk to him.
Yep.
All right, but yeah, so platinum has been on a run. Platinum has been another one, but that is so obscure
Yeah.
that who's going to put an income fund on it?
Hmm.
I think uranium is another play that
Yes.
you know the mining of uranium. But hey, it's all for me. I'm in a different section of my life. Do I want to bet on uranium? But if I was younger, I could see 1 or 2%. I could see one or 2% in platinum.
Yeah.
All right. I mean, that's not financial advice, but
Yes.
if I was still in my growth early years,
Hmm.
I would be looking that direction. Now I'm looking at the direction of hedging my portfolio. So if the market does go down, don't lose all my capital.
Definitely. And that's why I really appreciate your feedback on this stuff too, Brad, because I want to zoom out on this chart. And so we have PLTM, we have bar, which is the yield, the Granite Shares gold, and then we
Yep.
have just spot price of silver. Now, when I zoom out, this looks like just the most lackluster investment you could ever pick, right? Until we hit mid 2024, right? So during these years, I was not thinking twice about gold, about silver whatsoever. What were your thoughts on these assets? Were you thinking, "Oh, maybe it's time to buy in"? Did you see a potential there, or were they kind of off your radar like they were mine?
So gold has always been on my radar, and that you can always point back to a couple different funds or portfolios that actually hold gold or listen to Ray Dalio and
Mhm.
some of those other people.
Yeah.
And so it's always been interesting to me, but it became more interesting to me now that I can generate income off of it.
Yes.
I don't have to hold it as a, oh, I have gold because it's going to go up because, you know, the central banks, I think the first 7 days of 2026, the central banks issued more debt than any other week in central bank history.
Wow.
So you just sit back, it's something crazy like that. I saw a chart and I went, okay, so the money printing globally is
Mhm.
not going down.
No.
And as long as they continue to globally print money, these commodities such as gold and silver will probably hold their value,
Mhm.
right? I mean, and it's one of those, the countries are generated something called the unit, and it's majority backed by gold.
Mhm.
And they're using the unit to actually trade among each other, right? And it's superpowers. It's China, Russia,
Mhm.
India. When they
Brazil.
trade among Brazil, when they
Mhm.
trade among themselves, they're using units, and
Mhm.
they can immediately transfer the unit from a unit value into gold. So they sit
Interesting.
back and go, they can hedge their trading of, currency debasement. And
Yeah.
I just say we're too big to fail now. We're 118% of GDP on our debt.
Mhm.
They're just going to continue to print money, and hopefully the inflation will eat away this over time. But
Mhm.
that's why you have things like gold and silver, because it's an inflation hedge.
Mhm.
So
Very interesting, and that kind of carries us right into our next topic, which is international. Do you hold any international, albeit
I
growth,
do.
income? Why is that?
Well, there's two factors. One, the Europeans and some of the other, I just say Europeans, they're ahead of us on the cycle. So they've already started to do quantitative easing in those countries, such as Germany,
Mhm.
and they're going to outperform us technically because they are doing more money printing. It just comes down to they're pumping their economy. And you sit back and go, if the dollar is deflationary, European stocks profits are actually higher in terms of the US dollar.
Mm.
If in all fairness, the US dollar was like down 10% last year. Well, international stocks was up like 26. Well,
Yeah,
they were only up technically 16. Our dollar just dropped off 10,
that's a good point.
right? So, in terms of dollar compared to the euro, we're down 10%. And I don't think that that's going to change until maybe fourth quarter this year.
Yeah.
And you can follow the Dixie. That's, one of the indexes that you can follow. If the Dixie starts going up, then international may start to underperform, something like the S&P 500.
Did you see, correct me if I'm wrong, but Trump ordered them to do a bunch of MBSs, mortgage-backed securities, at a
Yes.
6% rate,
Yes.
which is
Two,
pretty big
two
news.
hundred, 200 billion.
200 billion.
200 billion. And then he threw out on Friday night, uh, credit cards can only charge 10%
Capped it
interest.
10 per that is going to destroy wait, okay, let me pull these up because I think Visa, Mastercard, There's a
I don't know if I don't know if he can mandate that,
I wish he
but
could,
that uh,
genuinely.
but you just sit back and go, I think, well, let's throw out what's the biggest threat for this week.
Mhm.
The biggest threat this week is Wednesday. The Supreme Court is supposed to rule about the tariffs.
Oh, yeah.
What happens if they have to give back all the tariff money? And it's not so much I all political affiliations aside, I think that they'll find a way to keep the tariffs in place.
Mhm.
It's just the uncertainty of the Supreme Court ruling against them.
Mhm.
Then they'll have to find other methods of keeping it.
Mhm.
And it's just more uncertainty. And the market does not like uncertainty.
Yeah, definitely. And do you think we're gonna get these stimulus checks again? They're saying there's supposed to be a what is it, 2,000 or 3.
2000, yeah, $2,000. There was six things. It's a mid-year. So historically, mid-year, the stock markets underperform for during the first 6 months of a mid-year election, if you go
Mhm.
back historically.
Yeah.
Yeah, and I think the difference of it is they're really trying to make everybody feel good
Yep.
to keep status quo. And
Mhm.
right, wrong, or different. I mean, I don't blame them. I mean,
Yep.
let's face it like that, right? I mean,
Yep.
that's what they all do. But
Exactly.
is it the best thing for the nation? That's I don't know. That's somebody else's decision. I just feel that Brad and his little life and my little world is I just don't want to lose any money because somebody decides to do something that I have no say in
Yep.
or any control on.
Yeah, I would much rather have everyone just lower taxes, genuinely. And I think
Eh,
I've said this over and over. I
Yeah.
live in California, the highest tax state, I think, total. I think we're right up there. If we're not first, we're second, and New York's right ahead of us. Taxes are it just blows my mind when it comes to all this investing stuff, and it hurts. And so I think Trump was talking about getting rid of property tax, but they throw these things out there to try to boost what people think about them and whatnot. And California blocked the no tax on tips and the no tax on overtime. And I can work overtime. I do work overtime. So I'm bummed about that. There's all this stuff just kind of hurts in the end.
But
It seems like
that's at the state level,
correct at the state
right?
level. I think there were
It
11 states that blocked it.
Yeah, so at the state level, that's one thing is like personal property tax. Now, I live in a state, or I domicile in a state for legal terms, in a state in a state that does not have income tax. It
Hmm.
does not have taxes on 401k withdrawals or IRA withdrawals. It does not tax your Social Security. And I chose this state because of those reasons. Now, the way that they generate their income is I wouldn't want to own a house there
Yep.
because that is where they get their money. None of these states are free and cheap.
Yeah.
Texas is the same way. If you're domicile in the state of Texas and you buy a piece of property, they're getting their money. And Texas is a big state, lots of land, and that's how they get their money.
Hmm.
And you sit back and look at this going, I've lived in 6 different states, and I've went from tax-free shopping to higher property taxes. And when you move from like the state of Delaware to the state of Missouri, just the difference in cost of registering your vehicles. You go
Yeah.
from like $25 to $250. You go from, $900 a year property tax to $6,000 a year in property
Yep.
tax. But then when you look at your paycheck and what you get to bring home,
Mhm.
it's a different story, right? Where one
Definitely.
state was really high on what they're taking out of your paycheck, the other state is really low on what they were taking out of you. But they're getting them. They're going to get their money one way or
One way
another.
or
It's just just semantics of how they're going to get it from you.
exactly, and I wrestle with this idea so often. So I live in California, and my 9 to 5 job, I've said this on my channel before, it's not a shocker. I work full time as a biologist, and that's where like the data analytical side with investing plays right into what I'm used to and what I'm trained on when it comes to, the science field. I make more money in California than I would in any other state. And I'm not talking like 5%, I'm talking like 25 to 30% more. And with that comes a lot of issues. Like my California, my fee for holding a business is $800 in an annual tax to the state of California. In Georgia,
Yeah,
it's $50. My
yeah, yeah,
registration on my vehicle is almost $350 a year. Whereas in Idaho, the same vehicle, it would be $60 for 2 years. But I make more money here. I pay more taxes here for that same exact reason. But that's really the interesting thing. And I'm on this investing journey. I'm trying to put as much money into the market as I possibly can. And in the last year, 2 years, well, 3 years ago, I bought my house. And I've seen just in that time how incredibly expensive everything is now. And I don't think this is just a California problem. We've seen the cost of living go up, we've seen renting go up, and all these different expenditures going up. But that's the thing. And that's part of the reason why, circling back to all these new funds, why we're seeing more of this the leverage component is I think people are literally using it to survive. And I think that
yeah.
it's a very scary thing when, young people who typically would be growth investors, right? Who would
They
be
feel trapped.
S&P. Yes, feel trapped and, well, there's nothing else I can do. And that's why we saw the rise in yield max because all of a sudden the American dream was way more attainable, right? If Misty can still pay out 111% every year and for 5 years, I'll have $500,000 and I can quit my job. That idea behind all of these things has been really, really interesting. But the silver lining to that, I will say, is that I think a lot more people are getting interested in investing, even if, we don't necessarily have the money that we used to. I think people are getting more interested. And I hope that trend continues because I have a lot of friends who are my age or older than me, and they do not have a single care in the world about investing, about retirement. They think, oh, I'll worry about that when I'm in my 30s, when I'm in my 40s. I can tackle that. And that kind of horrifies me. And I'm like, please
Yeah.
start investing.
I have met so many people over my career out there that they weren't saving, they
Mhm,
were saving just the 6% to get the company match.
mhm,
And somebody made a comment today on my channel about I didn't talk about much about taxes.
mhm.
Well, 99% of my income is in an IRA and Roth. Now, I will say that's probably my biggest downfall also. So,
Really?
yes, I didn't have a big enough bridge
Okay.
because I'm not 59 and a half yet, right? But for me to take a withdrawal in a tax-free state is like me living in California
Yep.
because because you don't have to pay the 10% anyway if you were living. So I look at it in those terms. So having a taxable account really is important,
Mhm,
but also saving in a tax-free account is just as important, and you definitely have to be getting the company match.
mhm.
I know other people like, why have an IRA or a Roth? I'm going to retire early. Is it a dream? I hope not for 'em. I really don't. But now that I'm getting, I looked at the calendar. I'm really close to that 59 and a half now. I'm getting closer every month.
What, 10 years? 10 years away?
I have just about 12 months,
12 months.
right? And
Wow.
then all my Roth will be tax free.
Oh,
All yes,
you gotta
tax-free
celebrate.
withdrawals, right? Yeah.
Yeah.
So you sit back and go, having stuff compound. And the other one in that is, and this it came up the other days, I did some swapping around in my account, and people were like, "Wow, you're really doing a lot of selling," and why not? I don't have to
Mhm.
pay long-term capital gains or short-term capital gains.
Yep.
And you do have to watch, if you have a brokerage account, you have to watch out for the wash rule,
Yes.
because even if you trade it in a 401k or an IRA, and you can get into the wash rules there,
Mhm.
but I don't have to watch the wash rules because it's all I'm not I don't own the same stocks or the same ETFs in my brokerage as I do my Roth or my
Okay.
IRA. So I don't have to really worry about those wash rules that way. But it's an interesting conversation. And we had interesting conversations about that in Costa Rica,
Mhm.
where we literally had a CPA with us,
Yes.
and he told us his interpretation, and I'm like, wow, that's yeah, you could sell SPY and then buy VU. I
Yep.
was like, what?
And that's why I think those trips, it probably for viewers are probably like, "Oh, it's like a vacation." And it is. I'm not playing that off at all, right? We surfed, we ate good food, we were at the beach a lot of the time. I took a nap for the first time in, I don't know, a year. But the groups that are there, you learn so much, right? We learn so much from the different backgrounds of everybody, and I think that it is really, really fun to go and experience that. Even, it is a work trip. It is a fun work trip, but it is a work trip. But when you get there and you're talking like, I never would have met him, never would have had the experience to talk to a CPA in depth about these things, and one that's, crypto focused and all these different things. It's
That's
it's
right.
really cool, those experiences.
That's right. Being exposed to different people of different walks. I mean, a lot of the options traders that we talk to uh, don't have any experience about swing trading.
Yep.
And when I say something about swing trading, they just roll their eyes at me, and I'm like, okay. And when I talk to swing traders about options, I get the same reaction,
Yeah.
and I'm like, okay. But
Yep.
it's all it ends up being all about our life experiences.
Mhm.
And my life experiences are different than others people's life experiences. And during the pandemic, I learned all kinds of things about options and
Yeah.
options trading. And then I started doing my own options trading, and I'm like, okay, I can do this, right? I mean, I was looking at how I could boost my accounts to do better. And I'm like,
Mhm.
I think that this is different methodologies of doing it. So I sit back, and now we have so many different tools that can do it for us. I mean,
Mhm.
do I want to sit there and options trade all day in retirement? No. What happens when I go to Costa Rica for a business trip and I have options trades open, not knowing if I'm going to have internet or not?
Yep. Oh, yeah.
Because let's face it, cell phone service was sketchy down there
It was at best.
at best. So you sit back and go, do you really want to have options trades open and not be able to close them out or roll them or anything else? So you sit back, and that's why I like the ETFs. That's why I think on my last video, I showed all the ETFs that I own have positive price return on top of total return. Total
Mhm.
return was one way I graded them. And then I brought up a price chart of all the commodity versions. And I said,
Yeah.
every single one of them has a positive price return. I have no NAV erosion in
Mhm.
my equities, right?
Love that.
And I sit back and go, some people are okay with some NAV erosion,
Mhm.
but it's all about where you come from, and your psychology. So yeah, there's
Oh
a
yeah.
lot of great stuff out there. I look forward to talking to Cy this week, and I look forward to the new boosted funds. I think that for me, 1 or 2% of my portfolio. Maybe for Spencer, I don't know, 10, 15,
Bit
right?
more. Yeah. Well,
Yeah,
um,
yeah.
I got to figure it out. That's definitely it's going to be an interesting thing, and I wonder like the allocation to Tap Alpha versus Neos. I gotta work all those details out. But I
Yeah, that's another one that I've recently heard of somebody on X go, they have all their money with NEOS.
Mhm.
And trust me, I've done a video, retire on NEOS,
Me too.
right? And I sit back and go, I don't know if I'm 100% comfortable. Not not because all my money's tied with NEOS and NEOS funds,
Mhm.
but that means US Bank, the trustee, has all my money.
Great point. Oh yeah.
And I, and unfortunately, Tap Alpha is US Bank also. So, okay, you're just
Either way.
doubling up,
Yeah.
right? See, does spreading among trustees matter? I don't think it personally, I don't think it does.
Yeah.
But I'm assuming because there's other rules that people say out no more than uh, a 3% allocation to any one fund. And I'm looking at mine going, okay, I'm close to 9.
I'm at like 15 to 20 on SPY with maybe even more than that if you count growth and income. It's
And I shouldn't say 9 in one fund. I mean, my
yeah.
QQQI is close to 9%
Yep.
of my income portfolio. And that's gets in another one. I have income and I have growth.
Mhm.
And I keep on sharing my income with everybody. And after a while, you can do the math. You can figure out how much of a portfolio I have there.
Mhm.
And I finally just had to tell somebody, by the way, my growth is exponentially larger.
Yeah. That's amazing. That's amazing.
We don't even touch my wife's portfolio.
Yeah.
My wife is 100% growth.
Yep. Mine is as
All
well.
right.
Recently, yeah, threw her all the way in growth.
And it's just one of those, what do we do? And for an older person, my wife gets a pension in 2 years.
Oh,
So
amazing.
not only do I qualify, for tax-free withdrawals, she gets a pension on top of it.
Mhm. Wow.
So, I'm sure that you may or may not still work for some place that gets a pension,
I do
but
have a
those are getting
pension.
they're farther and farther in between.
They've
So
they've just gutted mine. I mean, I'm not I think it was in 2017, which mind you, I was still in college in 2017. Freshly in college. But yeah, that's when they gutted our pension plan. That is really unfortunate. And I've discussed this with my father, which one of our comments on the last thing was so funny. I don't know if you saw it. It was another father and son comment, and it cracked
uh,
me up. Those always make me laugh so hard. But my biological father, he's always a big proponent of pension plans. He says they're amazing. He has one and he said you retire and you get 80, 90% of your income, in some cases more, plus cost of living benefits. That's not the case anymore. I mean, they've had to cut a lot of the money going to these because California's in debt. I'm not sure if it's farther than that, if there's more issues, larger, US wide issues with it, but ours now it's down
yeah,
to I think 60%. And that's if you put in like 35 years.
yeah, and part of the problem is we're living longer. My mom is 90 and she collects 2 pensions.
Wow.
She's got her pension and she gets half of my father's pension.
Yeah.
She's been retired for 35 years and she's
Yeah.
still collecting 2 pensions. Right? She was able to retire at 55. I was a little bit later in life. I was at 58 when I
Mhm.
retired. But maybe it was because of her and my father that I learned to save to retire because they both retired early, right? And
Yeah.
and even my grandfather,
Yeah.
eh, he changed professions mid-year, midlife to work a different life later in life.
Interesting.
So, yeah, it's an interesting story. I mean, he ran a five and dime store during the Great Depression.
Really?
So,
Wow.
yeah, I mean, I am a little bit older, right? So, yeah.
My grandfather fought in World War II, so
Yeah.
he did.
Yeah. So my grandfather was too old to fight in World War II, right? But in World War II time, that's when he went from running a store
Mhm.
to running a farm,
Interesting.
right? And then I became his indentured servant when I became old enough, which legally was not old enough, but
Yeah.
yeah. Hey, well, dude, well, I'll make you a deal. Oh, yeah? You become my indentured servant.
Times were different.
Yes. Yes. I always somehow always owed him money, right? But
Oh,
I also, learned an a lot of life lessons. One, how to run a business.
yeah.
Because he ran a farm and that farm was a business, I got, people made fun of me in high school because I was showing dairy cattle and doing other things. Well, what they didn't realize was at 16, I had tax write-offs that they'd never had.
Yeah.
All right. So
Oh, yeah.
as soon as I did have a job, I was already writing off my taxes because everything I paid my grandfather for the baled hay was literally a tax deduction.
Yeah. Wow.
So yeah, I learned at a very young age about how to run a business and how to balance the books in running a business.
And that knowledge, I mean, it's so hard to get. You can't just walk into a company and learn that stuff, and I've had the amazing privilege of knowing many business owners, and YouTube has really helped with this stuff too to expand. Hopefully, I do have a plan to start a business that different than all this stuff. And I have so many resources available to me that a lot of people don't normally have. So I'm very blessed in that sense. And it's really interesting, but not everyone gets that opportunity. So it's awesome that you got it and you got it at such a young age.
That's right. I mean, you look back and it helps me in my investment career. And I think we started this because I said that options traders didn't know swing trading and swing traders didn't know options trading. And I
Hmm.
think to be a well-rounded individual, you need to know a little bit of both.
Hmm.
You don't have to be a technical expert at swing trading, and you don't have to be the technical expert of options trading, but at least you should know the terminology of both sides of the fence. So when we do have conversations, you don't get glossed over of what's he even talking about.
Definitely. And that kind of points us in the direction of our final talking point. And you already explained this to me, but the people need your explanation because it makes a lot of sense. I'm also seeing live comments about it popping up on my video. So I just put out a video on these NEOS funds, right? We have IWMI, QQQI, and SPY. And currently on the 1 year, if we go to our total return, the winning fund is now IWMI, outpacing QQQI barely by what? 0.3 and well outpacing SPY. And I want to showcase that the Russell is already up 5+% in 2026. So, and you gave a phenomenal explanation as to why this is, and I think everyone is definitely going to want to hear that.
So the Russell being 2,000 companies, a lot of them are not profitable because they have debt. They run a lot of debt. Some people may call them even zombie companies. But when the federal rate is lowered, they become exponentially more profitable. And by them becoming more profitable, you see the price appreciation. You can see the same thing happened right after 2000 or 2020. when they lowered the rates to zero, the Russell
Yeah.
took off. And it's the same thing. Just like in 2020, you're going to see these funds, and you can bring up, let's show the subscribers or the viewers IWM,
What do you want?
SPY,
QQQ? SPY?
and the Qs, and put that on a 5-year chart,
Interesting. We go
right?
10 years. What does 10 look like? Yeah.
No, it's always going to be the Qs. But if you hone in to that right there, you'll notice that IWMI is going to exponentially go up
Mhm.
because of interest rates. And it's going to be the same thing. They're going to exponentially go up because of interest rates. I say, and this is just my thought process, is 72% of all the profits being made today is in technology.
Yeah. Wow.
So I tend to go to the Qs. I got that from a private equity fund called Coate, Coatoe. They have phenomenal resources on their website that you can go out and download for free. And they brought up where all the money and who's been making the money. And
Mm.
that's why I lean more heavily towards the Qs than I even do SPY. Even though
Mhm.
even though I'm doing a little more in SPY now, but that's just, I'm still more heavily into the Qs.
Yeah. I am as well. It's just tough. And that was kind of the basis point for the video I posted today, because the crossover between QQQ and SPY here. Let me just pull it up, and I'm curious what you think of this, Brad, because it had, what was I on? I was on stock analysis. And it's so interesting, the crossover with SPY and QQQ. Let's try this, which is going to show basically the same thing, but then it also gives us the holdings. So we have SPY, QQQ, and IWM, NASDAQ, S&P, Russell 2000. And same kind of thing. We've seen the Qs outperform. But when we go down here to their holdings, I mean, it's crazy, right? We have SPY and QQQ, NVIDIA, Apple, Microsoft, Amazon. They both have
Mhm.
Google, Tesla, Meta, Broadcom, Costco. I believe they both have PLTR. I want, like, Netflix. There's so many that cross over, and these are not low weight percentages, right? Like, I mean, the first 4 to 5 alone, you're looking at what, 25% plus, and then it
Yeah.
only continues on. So I don't want all of my money thrown in, because I was thinking like, oh, I'm diversified. I have the Nasdaq and the S&P, but they're pretty heavy in the ones where it really counts. 9% in Nvidia, and it's going to be higher in the Qs because there's only 100 holdings versus the 500. But Nvidia is also a really heavy portion of the S&P 500 as well. So then you get to IWM, and I was looking to see if I could find any that carry over, and they don't, because you of course have the largest 500 companies, and then you have more tech heavy side of things. But it at least gives you some diversification. So do you use Russell 2000 ETFs? Do you have any
So
growth
I
holdings?
was in the Russell, and I had the same philosophy at that time, and then
Uh-huh.
they did not cut rates. They paused the rate cuts,
Yeah.
and I waited for me to be profitable again, and I got out of the Russell, and I decided, hey, I'm going to place my logical bets on SPY and the Qs, but more recently I started hedging the Ys and the Qs. And I'll just say like this is, hey, if the Qs go down 4%, I have a fund now that I don't lose any more money.
Yeah.
All right. So, granted, I don't win as much as you do
Mhm.
on the upside, but my downside is also limited also. And that's the difference in age. Would I do that as a younger investor? No, not
Yeah.
at all. But as an older investor, we got to think about, I don't have, besides my little bit of YouTube income, I don't have any income coming in. I'm
Mhm.
literally living off of my distributions, and that changes your mindset.
Oh, 100%. And that's kind of what I was thinking was if I did do like I would do a position in IWMI, 14.5% distribution rate, very, very solid, but it's probably one of the only things that I would not drip because it's an underperformer, right? So I would be more diversified, maybe have a bit of a hedge depending on what the market does. If we do see small caps hold up a little bit better as we cut rates and whatnot, but I wouldn't be reinvesting my dividends because I mean, look at this chart. I don't think it's foolish by any means, but in my own investing opinion, for me, it would be foolish when you have something up 185% since a little early of 2016 versus 550%.
I think here's a hypothetical for you.
Mhm.
We're going into rate cuts. We're going into quantitative easing, even though that's not what they're going to call it, but that's what they're doing.
Mhm. Yep.
What are you going to do when they say we're going to raise rates and then we're going to quantitative tighten again?
I'm averaging down no matter what. That really has kind of shifted my mentality with a lot of things, and it's so
It's
interesting. I see it now more than I ever have, like, as opportunities, right? I am still a long-term investor. I don't really like to swing trade, especially my income ETFs, right? Like the ones
that's right.
my main holdings. I like to hold NEOS, I like to hold TappAlpha, and I'm not planning on selling them anytime soon. And so what I do
Uh,
now is I think we talked about this in episode 1. I hold more cash than I ever have before. And it's funny because it doesn't show up on my brokerage statements, like on Blossom and whatnot. But I think I have $8,000 or $9,000 currently in cash that I'm just holding.
Hey, I'm laughing. My end of month distributions are more than that.
Yeah, see, you
They're
had to
different,
do it to me,
different.
Brad. You had
I
to
know
do
it's a
it
different
to
part of my
me.
life. It's like, oh, I, the, I think Neos pays me more than $8,000
It
at the end of the
probably
month.
does. I think I made $3,500 in dividends last year for the entire 12 months. But I do think I have a lot of growth as well. So I'm not fully
Okay.
focused on dividends. But yeah, you're living my dream, Brad. Thank you for reminding me of that.
Yeah. Mine so that conversation is my income side. I
Yeah.
didn't do anything last time. Uh, my growth side, I sold it at the 200-day simple moving average.
Yeah.
And I think that I'll do something very similar this time. I think in my account, because of the boosted and me being a maverick, hey, then I'll
Hmm.
buy some of these. But if we hit the 200-day, I sell them and go to cash,
Yeah. Yeah.
right? Or I get really crazy and buy the inverse. Yeah, that's yeah. Well, it's actually done fairly well. So
Yeah.
it's another possibility.
Definitely. I'm inverse averse, if that makes
Mm.
sense. I don't normally I probably should. It probably would strengthen my investing game and whatnot, but it also means I have to be a little more active. And I'm such a lazy investor, honestly.
And that's the whole conversation is I don't want to options trade for a living.
Hmm.
I want to go travel for let's say I don't have internet for 2 or 3 weeks. I make a bunch of videos, I post them up, later in life, right? Because we can do that,
Yeah. Oh
right?
yeah.
And then you sit back and go, what if I go on a cruise for 2 weeks? What do I do?
Hmm.
I want to disconnect. I don't
Yeah.
want to be on the internet. What do you
Tracking.
do? How do you track that, manage that? And you know, I'm beyond, I didn't when I was growing up investing, I used to look at my portfolio once every 6 months.
Hmm.
Now I look at my portfolio 6 times a day,
Yeah.
right? But
Interesting.
I also sit back and go, part of that's because I'm on YouTube.
Yeah.
But I also now I think I'm to the point of I only have to look at it every 2 weeks.
Mhm.
And that's more of how much distributions do I have coming in? How much am I going to reinvest and what am I going to reinvest in? And do I have to balance my portfolio?
Mhm.
Beyond that, I want to get to a 2 week or monthly cycle that I don't need to look at my portfolio. And, I'll have it set up on TradingView that I get an alarm if it hits the 200-day simple moving average.
Mhm.
Then I know I need to log in, you know.
Yeah. You're like, "Oh, gotta go to work."
Yeah, but I'll already be like, making a YouTube video about it before. Well, it's crossing. You guys
Yep.
want to see me sell, right?
Exactly. Oh,
But
well, awesome. We should probably wrap this up. We're over an hour again, Brad. I don't know how the conversation flows so
but
easily,
I
but
think I think that you need to edit it down to an hour. There's 6 minutes in there you could cut out.
all right, I'll work on that. But as
Very
always,
good.
yes, final thoughts. Thank you, everybody. Let us know in the comments what you want to see us talk about. Give us some ideas. I'll do my best. We'll respond to a few comments, but we respond to our main channels primarily. So if you want to talk with us, check us out there. You can message me on Blossom. Brad has his circle group. Make sure you guys check that out as well. And we'll see you guys in the next episode.